the cooperative societies. So before we look at the questions, maybe we can have a preview format of the cooperative society. So just write the cooperative societies, income statement for the year ended. So we don't know the year. So mostly for the cooperative societies, they just account for the incomes, either from the dividend from the members, and then they subtract the expenses. So they only have two sections: incomes, which the incomes can be dividend from the investments. Dividends are from investment. Dividend from the investment. It can also be the interest from loan to members. They can charge the interest to their members and get the loan and the other investment. So we have other incomes and other incomes. So that will give us the total income. That one will give us the total income, and then to less expenses. So we have the normal expense, rent, and then we have salaries and wages, transport, you might even get AGM expense. Thereafter, you'll get the total expenses. So once you get the total expense, subtract from the gross profit, you get your net, you will get your surplus or deficit. Get the surplus or deficit. That you can less transfer if there is any transfer, less transfer to reserve. If there is any transfer to reserves, you will take there, and then you add the retained earning brought forward, so that you get the retained earning carried forward, the retained earning carried forward. So that is one statement which you need to prepare the format. Also, this examiner, he will not ask you, but at one point maybe akikuuliza, it is okay. He will need you to prepare what is called appropriation account. You did this one in partnership. Appropriation account. So the format for the appropriation account, you take a balance brought forward of the appropriation account. You add the surplus if you have, and that less deficit if you have the deficit. That you also less the interest paid to members. And you will get balance carried forward. So write this.
Display from the top kindly.
December 2020, we have been told, or you have not done it. You have done writing? So we have been told that Marula Farmers Cooperative Society deals in marketing of the two brands, Coffee, Safi, and Missouri, on behalf of the members. As per the society's bylaws law, the society is allowed to retain 20% of the sales from the Safi and Missouri for operations and pay the balance to the members. So we have been given the following trial balance. With the Safi Missouri expenses, we have loan to members and other items, which I will not go one by one. Number one, we have been told Bora Limited market survey and Missouri brand for Marula Farmers Society on that 1st December 2021. Bora Limited sold Safi and Missouri brand for $175 and $115,300 respectively. Bora Limited remitted the above amount to the Marula Farmers Wakulima Bank account on 15th January 2022. Marula Farmers Cooperative Society does not maintain a US dollar account in Wakulima Bank. So which means we'll have to convert it to the Kenya shilling they are using. So we have been given the exchange rate as at that 1st December 2021, 105, and January 15, 100. So it is now upon us to determine which rate are we going to use. We are going to use a rate of the closing date. We don't mind with the payment date. The payment date will not fall under the financial period we are preparing. We are preparing statement for that 1st December 2021. So whatever will come for 2022 is for 2022. We don't mind with that. So for us, we just need to account for January 2021 to December 2021. So the question is asking, that was a number one. Number two is the rate. Number three is the audit fee of 6 million is to be provided for. So that is a provision. So it is an expense which you debit the P&L, you credit the provision or the accrual account because it has not been paid. Staff salaries and wages amounting to 3.2 million are not being paid as at that 1st December 2021. Also, that one is part of accrual, but we'll also need to include in the salaries and wages. So we debit salaries, we credit the accruals. Interest on members' deposit is to be provided at 6.08 million. So that is their interest to members. Now, number 6, as per the relevant ministry regulation, cooperative societies are required to transfer 20% of their net earning to the statutory reserve. Okay. Now they need the Safi brand marketing account showing the profit or loss and Missouri brand marketing account showing the profit and loss. So we can prepare the two. So we will prepare Safi and so we can have Safi and Missouri brand income statement. Income statement for the year ended that 1st December 2021. So we will have sales First, we'll take the collective sales for the two brands. So we can have a brand of Safi here. We can have Safi and we can have Mzuri on the other side. Mzuri. The revenue, we have been told they sold Mzuri at $175,000. And I think whatever it is here, they are in 3 zeros. So you have to show that this is 3 zeros. We have at 3 zeros here. So they sold this at 175. The conversion rate is 105. We are using at that 1st December 2021. That is our conversion rate, 105. The other one is 115.3 multiplied by 105. So let's have the revenue. Now, we have been told out of this revenue they collected this one by selling these two brands, they are going to retain or to take only 20% to finance for their operation here. We have been told Safi and Mzuri on behalf of the members, as per the society laws, the society is allowed to retain 20% of their sales from the two brands, and the balance is to pay to members. So we will have to retain 20 here to pay the members. So we will say you take now 20%. So you take 20%. You take 20% of the two. You take the 20%. So what will be the revenue here? So take this multiply by 20%. The same with that. So this is the revenue which they're going to retain. The balance now they are going to pay to the member. So which will be the total minus this one. That one is the one which is they're going to pay to the members. So let's expenses, less expenses. Less expenses. Expenses we have been given here. We have marketing expenses. So for Mzuri, 640. And the other one is 150. We have processing material. This one is 860. That is processing material 860. The other one is 320. $320. We have processing wages. This one is 900. The other one is 30. So do we have any other expenses? Let's check. For the brand, specifically for the brand. So I think we don't have, so we can take the total expenses. So these total expenses subtract from the total revenue so that we can get the surplus. So our surplus will be this minus this, and also it should be the same with this. So that is our surplus that we have done with this one. It's only you need to remember you still have the balance to account here, which we'll have to pay to members. So that one is only that you'll have to remember. So that was part A and B. So we have answered A and B. Unless kuna swali, then you are free to ask. So if there is no question, then we move to the third part, which is requiring Safi, and Safi, not Safi now, but the company itself, which is Marula Farmers Cooperative Society Limited. They need the income statement or the profit and loss for the year ended that 1st December. So we'll take just a minute. Okay, good. Sorry. So we will pick the revenue. Part of the Zuri brand is our revenue for the Marula farmers. So we will have from Safi. You will pick the combined. So we will take the sales from Safi, which we will take the net value. So you can combine the two, take the net, which is this one. Also from Zuri brand, which is this one, to combine the two and get it here as the total value of the sales for that. Don't also forget to show that you have three zeros here. So once we have that, we now go to other incomes apart from these two. So you'll go to the trial balance, pick the other incomes. Loan to members, that is not an income. Dividend from the investment, that is an income. Dividend from the investment of 470. We have appropriation, entrance fee, maybe they are charging entrance fee. It's also an income of 300. And then share capital, sundry creditors, interest to members. Interest on loans to members, that is also an income. Interest on loans to members of 35,890. And then do we still have any other income? Basically, the income you check on the credit side. So whatever it is on the credit side, can be either an income, capital, or a liability. So once we have seen everything we have posted here, then we can less expenses. So less expenses. Now for expenses, I always say it, you start with the additional information. Why? So that you don't forget. So we have the audit fee. We have the audit fee. Audit fee is a provision. Then you have to check, do we have the paid audit fee in the trial balance? If we don't have that, we put this figure as it is. So if you check the trial balance, is there anywhere written audit? No. So then we will only need to account the 6 million here. So if it was there as an accrued, so you could have added this one because it is accrual. So you could have taken whatever it is in the trial balance and add this. Salaries and wages. So we have salaries and wages. Do we have salaries and wages in the trial balance? Yes, of 29.20. So you take 29.20 plus, you take 29.20 plus whatever it is accrued here, 32,200. That one will give you the total salaries expenses. So that is the total salary expenses. Now we have interest on members, that is not an expense. Interest on members deposit is to be provided. It is not an expense, but it is you are reducing the capitals or the saving for the member, so it cannot be expense. So now we have exhausted whatever it is in the trial balance. We go back to trial balance. We pick the expenses, which we start from here. Traveling expense. So traveling expense, we have staffs 80,000. We have committee still a transport of 100. And then bank interest 200. And if I pick wrong figure, you said bank interest, hiyo ilikuwa bank charges. This is bank interest 810. Salaries and wages, we have accounted that one. Committee education 1,000. Committee sitting allowance of 1110. Printing and stationery 2050. General meeting expenses 500. And then members education is also an expense 500. Entertainment 50. Legal fees 400. Cash in hand, now we have done with the expenses. So total these expenses. So if you total these expenses, we get 19 to 10, which we will now total the revenue or the income. Is giving us that, so we can be able now to get our surplus. So which is this minus this. So this is our surplus. That's our surplus. So any questions up to that point? Any questions? If there is a place where you are not getting, you kindly ask.
Is bank overdraft not an expense?
Bank overdraft. How can it be an expense? Bank
Yes.
overdraft. It is in the which side of the trial balance?
Credit side.
So when you are doing introduction to financial accounting, all the debit is only an asset and expense. Credit is a liability, capital only. So this is not an expense. So you have withdraw more than what you have in your bank. So that is not an expense. It is a liability because you have to pay back to the bank. So that is not an expense. Now we have appropriation. We write appropriation account. So let's have appropriation account. So for the appropriation account, we say we take this we take this and then or we take the balance brought forward first. Balance brought forward as per the trial balance. How much do we have as per the trial balance? So the one we have as per the trial balance is appropriation account. It should be in the liability side. Yeah, we have this one 60, 50, 60, 50, and then the net income or surplus. Surplus, we have it here as our surplus. And then we say it, we add, we less. If there is dividend, we have not seen the dividend, you less the dividend. If there is any other payment which is relating to this, you less, but we don't have, only we have interest paid to members. Interest paid to members, not number. I think we can take this to this. So interest paid to members is not number, the last note. We have been told as per the note, the number 5. Interest on members' deposit is to be provided at 60.86. So we will subtract that. So, so what is our, I think these are the only one. No, but before this, there is a transfer. Number 7, transfer to the net earnings. So first, before we take that, we have to less transfer to reserve. Been told 20%. 20%. So 20% of this will be transfer. So take this, multiply by 20%. So subtract to get the net earning here, which you can cut this now to this space. So if I take this minus this, sorry, multiplication minus this, I get this one. So this is the one which I love to bring it to appropriation account, not the surplus itself. So I will bring it to that. Now get the balance carried forward for the appropriation account. So this is the balance carried forward. Balance carried forward. That is the balance carried forward. Then from there, we can't operate or open the statement of financial position. I don't think there is any major working, or we'll just need to see if there's any major working. Then we will do the working. So let's have Mzuri, not Mzuri, but farmers. Marula farm. Or there is anything you have not written? So Mendika. So make sure you write. Good. So we can have farmers statement of financial position. So we start with the non-current assets. Non-current assets. So what is our non-current asset? We have been given here Wakulima saving, Wakulima bank saving. that is 67, we have investment in wakulima again, that is 26. That one we have receivable, that is not